Welcome to the last live stream for my channel of 2024. It coincides with the last trading day on Wall Street of 2024. It has been an excellent year for stocks. Stocks have gone up real well for 2024, and it follows a really good year in 2023. I was hearing earlier that we had the best 2-year run since 1991 or so. It's been a long time since we've had such a good run, so it was good to see that uh, happen. As we look at 2025, what to expect. The way that the markets ended the year, I think, is giving us a preview of what's going to happen next year. We've got, for the last part of the month, the Nasdaq was down a little over 4%, which is a nice quality pullback. No big deal, but that might tell us that in January, this is, there's investors that are looking to sell some of the stocks, specifically in technology, that are sitting on very, very good gains. And that type of selling could really drive a good correction. We're down 4%. That's just a little pullback. But if we get below 10% overall, you can call it a correction. And if we get below 25, we can call it a crash. So we'll see where the Nasdaq goes. But my expectation is that January is going to be lower. We're going to go lower on stock prices if you go from January 2nd until January 31st. And I expect we're going to be lower than when we started. And I think the momentum that we've seen this week with stocks trading lower, selling off, really gives me that expectation. I already expected that in January we would see stocks give up some of these gains. And it's just, my senses tell me that, hey, it has been a great 2 years. Let's take a victory lap and enjoy it. Up 84.5% the Nasdaq has. That's great. But, to expect, hey, let's just put another 40% gain on this. That's just, wishing a little too much. And I think we'll have a more modest 2025. And it'll be important to be in the right sectors that maybe haven't gone up as high as some sectors and some industries. For example, semiconductors are really high. And I can probably look at a couple of semiconductors today and see what they're looking like. Today I see that Joshua joined. Thanks for joining. You want to talk about Devon Energy? Would be happy to talk about Devon Energy. Energy companies did do well today. And energy companies, when President Trump first won, they really rallied, but they gave up those gains and have kind of been on a slump. So we'll take a look at Devon Energy in a few minutes. Just looking at, where the market has been for the last month and kind of what it's telling me as we near the beginning of 2025 is, I think, again, we're on an expensive market, and I expect that market is going to give up some gains. We had, from the high in December, the S&P is down 3.33%. A good pullback, no big giant correction just yet, but we'll see if this continues. It might continue. There might be, just enough uncertainty and a lot of investors wanting to cash in some of those positions they have where they own a particular stock that maybe they're sitting on 2, 3, 4, 500% gain. They're like, you know what? I'm going to sell half of that. I'm going to sell 10% of it. I'm going to sell some percentage of it because I'd hate for that thing to drop. Then I'm sitting on half the value that I began with at the beginning of 2025. And I regret that I didn't cash in on some of those shares. We'll see. At the beginning, just to see how, the one thing I would say is this past year was really smooth. Like, we didn't have any big drastic pullback. And the worst that we saw this past year was when from July 16th through August 5th, we saw a pullback of 8.49%. And that was probably the roughest period we had of the year. And again, 2023 was a really good year. So we had really good gains. Before that, I think the other period that was a little concerning was from March 28th through April 19th. It was down 5.46. So my point being that the year has been rather calm. The volatility isn't there. If we go back, this is going to kind of get rid of, as you look at a larger timeline, we don't see the volatility, but you could see that this year was pretty rough, and you could see all that volatility that occurred from the top to the bottom. The S&P was down more than that. It was down about 25.5% in 2022. So it'll be an interesting year. A couple of things, just to mention it while I'm there. Bitcoin had a incredible year, up 121%. If you look at the 5-year, it's up nearly 1,200%. So it's been a really incredible time for cryptocurrencies, and with the new president, I think it's likely going to go up higher. But crypto did give up some of their gains in December, similar to stocks. It gave up 12.16%. And in the crypto realm, right, more volatility, so it jumps up and comes down at greater degrees. So 12.16% is down, but hey, I'll take it. It's been a great year. I own Bitcoin, Ethereum, Coinbase, and to see this type of appreciation has been great. It's been great to be a Bitcoin hodler for the last 6 going on 7 years. It's been a great rate of return. I'll take it. And I've been buying Bitcoin. I consider that as Bitcoin trades down under $100,000, I'm a buyer. I'm probably going to buy more today since Bitcoin trades 24 hours a day. I'll probably buy more late today or tomorrow. I'll probably do it before the open on January 2nd. All right, so that is Bitcoin. It had a great year. The NASDAQ had a great year. The Dow didn't have a great year, and I wanted to point something out. So this is pretty much less than half the rate of the return on the S&P and the NASDAQ. And you could see the much, rougher ride for the past year. I showed you the S&P. It was pretty smooth. And I would say that especially look at over the last couple of weeks, this has pulled back like 5.49%. So the Dow is made up of companies that are a little more older school, a little bit like Devon Energy, but Devon Energy is not that big, so they're not included in the Dow. It's 30 of the biggest companies we know of. Like Chevron is in the Dow, which is an energy company, and those stocks tend to be dividend payers. They tend to be kind of value stocks. The value stocks really fell behind. They fell behind growth stocks, and I would caution, if you're a value investor, I understand you're trying to invest, more conservatively. Totally get it. But the thing that I want to caution is oftentimes investors are enamored with dividends, and dividends are easy to understand. Hey, there's a dividend. One company pays 2%, another company pays 5%. It seems that the company that pays 5% is better. Well, not quite. As you can see, this is a rate of return of 28%. So if you were really hung up on dividends, I think you're leaving a lot of money on the table, because if you go to growth, whether it be technology or you go to biotech or whatever type of growth is really something you understand, your rate of return was 84%. So 28 versus 84, very easy math. So value dividend paying stocks really have not kept up for the last 2 years. So I would just say, totally respect older investors, more conservative investors like dividend stocks. I'm not talking you out of them. I'm just pointing out the fact that growth stocks have been performing lights out, and I've been leaving value stocks way behind, which is just a thing to keep your eye on. How you doing, Mike? Good to see you. And put your comment up there. For the most part, my dividend stocks have been clobbered this year. I rated 3 out of 10. Yeah, and that's my point. I've observed it. I've got dividend stocks, but as Warren Buffett would say, he believes that dividends are tax inefficient because you get taxed on dividends as ordinary income. And dividends are, overall good, but, I would rather see, like Coinbase. I probably tripled my money on Coinbase, and I could just sell shares if I needed them. If I need the money, I'll just sell shares. Or Meta, right? I could sell shares of Meta if I wanted to. Those are not dividend paying stocks, but they've appreciated so much that I'd rather have the appreciation. And then I get to control the taxable event. And in both cases, it'd be a long-term capital gain, which is taxed at a lower rate than ordinary income, which is taxed just like your ordinary income. And any incremental dollar is taxed at whatever level you've reached in overall income. So I wanted to point that out, but I'm not going to beat that to death. I just wanted to share it, as Mike alluded or really clearly expressed, is he's also seen it. So now I would point this out, that in 25, we may see a comeback of dividend stocks. We may see that the growth stocks have been doing great for 2 years, and maybe they sell off. And if you're in growth, maybe you see a negative year in 2025, or maybe you see a year where you have close to zero returns. And then value stocks really shine. We'll see. That could happen because certainly value stocks have not kept up. So maybe there's some upside there. And investors maybe move from high growth, stocks like an NVIDIA or a Broadcom. And they say, hey, I'd rather own a nice stable stock like a 3M, a Chevron, an Exxon, maybe a Walmart. I mean, these are, and don't take this the wrong way, nice, boring stocks. Walmart, they're going to be around forever. We all know what they do. Chevron, they're going to be around forever. We know what they do. I fueled up at Chevron today, gave them, and actually downloaded the app and pay on the app, which is cool. And they give me like 5 cents per gallon off. And then there's this reward system that basically I'm getting rewarded upwards of 15 cents a gallon, 20 cents a gallon. I'm in California, so we get to pay the most amount per gallon in the country. So I thought it would be cool to try the app. And I'm glad I did so. I should have done it a while ago. I think I could have saved at least a couple $100 throughout the year, but I'm ready for 25. I'll be saving a few bucks on fuel. All right. So Mike, I personally rather have both dividend stocks and growth stocks. Good plan. Good plan. Be diversified. Boring. The money, it spends the same. I have a nice boring stock in CTRE. It's a real estate investment trust. They own properties that basically get used for the elderly to live at. These are folks that need healthcare while they live there. It makes a lot of money for me. And you know what? It spends the same. Those dollars that I make spend just as well as my super cool Meta stock or super cool Robinhood stock. The money spends the same. So don't take boring the wrong way. I like boring because boring means like dependable. I don't have to worry too much about it. I started positions this week in a couple of neat little companies. For example, one of them is Upwork. And this Upwork company is doing something new for the gig economy. I really like their business, and they resemble like an Uber or like an Airbnb where they're making money from connecting people that need, resources, human resources to work on projects, maybe do gigs and so forth. But it could either go up really well, might go sideways. It could go down substantially. They can find themselves, because it's a brand new space. What if they get into legal trouble where states begin to say, hey, the way you're doing things, you got to start classifying everybody as employees. If you recall, Uber was having some challenges around that. There's more risk. So boring means I know what Walmart does. They're going to keep doing it. No big deal. I know what Kroger does. And you know what? I don't think I'm going to catch any negative surprise in 2025 for Kroger. If there's any news, the news will probably be, kind of small, trivial, and that's what I'm expecting. So, as you look at your portfolio for 2025, realize that, it's a good idea to, balance things out in your basket of wealth. Put some things out there that, there's a part of my portfolio that's in bonds and some value stocks. And that money is kind of solid. It's not going anywhere. Then I go with growth stocks and crypto. Crypto is the smallest. And I'm expecting that to grow. But I also see that, like in 2022, they really pulled back hard. And we all took it. We all took a pretty good haircut in 2022. Let me just remind you that in 2022, the growth stocks were down more than 30%. And that was pretty ugly on stocks like Meta. Robinhood, it was just sold off like you wouldn't believe. Coinbase was sold off like it just was completely undesirable. So when things sell off, those technology growth stocks really sell off fast. So we will see. We will see. It's fun to kind of, reminisce on the year and kind of try to figure out, how do I want to play the month of January and set the table for 2025. It's been an excellent year, 2024, 2023, even 2022. I consider it a very good year because I learned a lot. And frankly, I did okay. I had enough value in bonds. I also had some real estate transactions that made that year a very positive year. In 2022, what kind of saved the year for me is I had a huge gain on one real estate asset, and that more than covered all my losses on my stocks. So I'm not going to do a real estate deal like that every year, but that happened to occur in 2022 early. And it gave me a bunch of capital that I was able to put into the market when stock prices were down. So that was good stuff. All right. So before I move on, let me just mention, I want to wish everybody a happy new year. I I want to wish you a couple of things. First, good health. 2, fun experiences. 3, great returns on your investments. So that's what I wish everybody. And I really appreciate you guys tuning into my live streams, watching my videos, being a part of the community. And it's been a really, really good year. And I look forward to continuing it in 2025. All right. So Josh wanted to talk about Devon Energy. Let me catch up on some comments and then we'll get into Devon Energy. And Joshua, I agree. Meta has been my best purchase in the past few years. Yeah, growth could be valued a little expensively, and in some cases, a lot. So your spidey senses, I think, are aligning with my spidey senses. You know, it's not going to go up forever, but I'm not selling any of my Meta stock, by the way. It can go down, I'd buy more. Cool. I'm glad you have CTRE. CTRE has just been a good stock, and it's a wonderful, boring stock. I can't tell you one story that's occurred at CTRE over the last 2 years. Not one. Not one that's controversial, not one that's a negative surprise. I could just tell you CTRE has made me money. It's almost like, you know, you have this stock that is low maintenance, just sits there and makes money for you. And it's like beautiful. Up 62.5% in, let's call it 2 years and a quarter. It pays a handsome dividend. It was paying, say 3 to 5%, depending on the time when we're looking at it. So you're getting paid a nice dividend. Stock's up 62%. Wonderful. Awesome. What are your thoughts on China stocks? Just trading sideways. Both. I bought it $95 for years ago. So I think China stocks are unappreciated, underpriced. They have much more value than their prices would show. But the reality is that it's just not what generally stock investors are looking to buy into Chinese stocks. So I'm going to hold my Alibaba. Actually bought some more Alibaba over the last couple months, and I bought into an ETF for China stocks. And I'm really watching China stocks. I think China has a bright future. They're growing much faster than the US. Some things they do really well. I think the EV market is just going to get so much intense competition from China. They're putting out really good products there. On the technology front, as you guys likely heard, TikTok, which is a ByteDance property, the president-elect is asking the Supreme Court to pump the brakes on making TikTok illegal in the States. And that's, again, back to Asia, back to China. They're doing some things that are quite interesting. But the reality is that the Chinese stocks are not going to rally until they rally, until investors say, you know, in general, they're very desirable. For now, I'm just going to be careful, put some money there. So on cash, I built up some cash in late November, early December, thinking I got to have some cash. I have a feeling that we're priced too high. And I'm thinking I'm like 8% in cash right now. So I'm not like 50% in cash. Warren Buffett's got a huge cash amount. I did some selling, tax harvesting. You have cash around 15%. Cool. And I would also say, as part of my cash position, I have some bonds that are going to be maturing, and that's part of my, cash circulation. So I'm probably going to have about another 5% of cash in 2025 redeeming, and a good amount of it is going to be in the first 2 months. So the first 2 months, I'm going to get more cash. So I'll probably be closer to 10% if I don't buy anything. But I've been buying stuff. This pullback, I like to dollar cost average, and I'm glad that I've got cash to do so. Yeah, Happy New Year, Mike. It's been a pleasure to interact with you, and look forward to 2025.